All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. Starting off with the S&P 500 here, you can see a little bit of a buy program early Monday morning. If we flip to the intraday, just got a quick buy program, and one little buy push was enough to push us up to an all-time high. Found some resistance right here at this trend line here that we've been watching for quite a while, and markets pulled back just a little bit into the end of the week with a sell late Thursday and late Friday afternoon. Now, not a whole lot doing here on the S&P 500. This trend line has been good resistance, as has this one. So we notice each time we get up there, it causes some type of reaction. We had kind of a failed bullish pattern here on the SPY, and another kind of failed consolidation here the last time you got up there. Also, in November, or excuse me, earlier December, we had this bullish pattern, tried to break out, tagged that trend line, and we pulled back. So this has been good resistance here. Now, granted, last week was very light volume. A lot of traders on vacation. A lot of the big boys were away in the Hamptons, in Florida, wherever. And there was not a lot of participation. But the market's still unable to make a new all-time high and starting to roll over just a little bit. Now, we won't make too much out of it right now as there wasn't a lot of volume. But I do have some problems with tech right now. So if we flip over to the triple Qs, we lost this opening gap on Monday on the triple Qs by the close. You can see we closed below this low, so that is a failed bullish inside bar there on the triple Qs. You'll also see the same thing on the semiconductors via the SMH here. Despite the light volume, they were not able to make new highs or really do anything other than that gap up Monday, and then Tuesday, Wednesday, Thursday, Friday selling, closing below that low. So a failed bullish pattern on the semis as well. You can see on NVIDIA, this closed below this green bar on Thursday, and continued lower on Friday. Same thing on AMD. So a couple of the leading semiconductors pulling back here a bit and making lower highs now. Also, let's take a look at the actual SMH. I want to show you this monthly candle. So we had a power bar here, and then we have a hanging man doji on the monthly. So that's generally, not a good candlestick pattern. It's definitely a bearish candlestick pattern. You're also parabolic, and these types of dojis, hanging man after a parabolic move can signal a reversal. Same pattern here on the triple Qs, except this pattern is even worse because you have a shooting star preceded by a hanging man after a parabolic move with volume. We look at cloud software via the IGV. This is actually topped out in November after a power bar and 1-2 bars lower. Look at the volume there on the IGV. Also, the weekly time frame kind of putting in a bit of a bearish inside bar here. So sharp move down and sideways chop could be putting in a bear base. Daily pattern, lower highs, pretty much across the board. So I am not a fan of tech right now. That doesn't mean the market can't move higher at some point. I think, the max move for this market is probably around 49.60. So the SPY, that would be 490.60. And that would possibly coincide with a move up to this upper trend line here if it were to move higher. However, I'm not so convinced that happens. I'm actually a little bit more in the bearish camp. I do think January is going to be a down month, and especially tech-wise. I think tech will be leading the market lower here. Let's take a look at a few other indexes, though. IWM here, nice move off the lows, trying to consolidate sideways, has some resistance at these pivots, but if this rolls over, you're going to have a series of lower highs in place on the daily, and it's probably going to want to retest this low. And if you break that, you're heading down to about 195 here on the IWM. That would fill this gap. If we pull it back a little bit, you can see it. That would fill this gap right here on the IWM, which was really the breakaway gap from really a year ago. So this was January 4th to January 6th right there on the IWM. So that's just kind of the outlook here on the IWM. But, it's hanging in there for now. We'll kind of give it the benefit of the doubt unless it rolls over. Dow Jones hit a double top here, now pulling back a little bit. Not a lot of volume going on, though. I do expect the Dow to be the leader over the next couple of months. Let's take a look at Treasury Yields. So 10-year came down, a little bit of a retest at this low, hit this trend line, bounced, small bullish pattern, pop, and then a bit of a test on Friday before closing back inside of this green candle from Wednesday. So I do think yields push up here and head back to the 1.65 area there on the 10-year over the near term, and that will put pressure on tech as well. And the same thing with the 30-year here. Push up, nice little bullish base, pop, a little bit more of a bull base, and then a pop, and now a little bit of a test candle at the low. did hold support there on Friday. I think the 30-year probably pushes up to about 2%, maybe 2.1 or so over the next couple of weeks. And obviously, again, that will put pressure on tech stocks. That will benefit financials, however. The XLF has been hanging in there. Did make a lower low last week, though, and I do not like what I'm seeing from financials, given the fact that yields are, sort of in a, if we look at yields again, they've been advancing really since early December, and the XLF has just had trouble here. You made a lower low a few weeks ago, so this was your low in early December that coincided with the low in the 10-year, and then you had a bit of a rollover. So financials not showing strength and tech not showing strength. That's not a good sign overall for the market. Broker dealers here, again, lost this green bar gap up from Monday, so that's a failed bullish pattern on the broker dealers. So financials are not behaving as strongly as they should be with yields pushing higher, and that is a bit of a red flag for us moving forward. Let's talk here about energy. So crude, nice little pop here on Monday with everything else. With the members on Patreon, we did take a really nice gain on UCO, which is 2 times long crude oil. That was a really nice trade for us. Now crude coming into a little bit of resistance. I said it would get up to about 77. It got up as high as 77.44. There's a chance it can come up here and test this 78.50 area, maybe 79, 79 and change at this little pivot high. But overall, I think that's kind of your limited upside right now, at least in the near term, before it has to at least probably come back and test the 72.50 area. And if it rolls over farther than that, then you've got support at this blue trend line right here, which has been a pretty reliable trend line over the last couple of months here. So you can see every time we react to that, we get a positive reaction. However, if we can't make a higher high off of this reaction, notice how you had a high here, took out the previous year-to-date high. Can't make a higher high, that's at least signaling weakness in this trend, and an increased probability that we do take out this blue trend line if we were to come down and test that. So just keep that on your radar. I'm not saying it happens, but that's kind of what you want to use the technicals for. Anyways, let's move on here to XLE. Nice little pop on Monday, like everything else, obviously 3-bar pullback, and then a green day on Friday. I think this can probably trade up to 57. Let's step here, 57.50, maybe 58 in the near term. But I'm not a huge fan of the energy stocks right now. Again, they're still making lower highs as well. You see the same thing on the XOP, and I've been talking about the OIH. I do not like the OIH. It has been weak for a while now, just way off the highs, way off the year-to-date highs, not even the month highs like everything else, but way off the year-to-date highs and making lower highs here on the daily time frame. If you're going to play energy stocks, though, be in the XLE. So those stocks there, they've been holding up much better overall. But I don't think there's anything really to do with the energy stocks right now, just at least in the near term. Nat gas, choppy all week long. Tried to bid up early in the week and then rolled right over. Had a potential breakdown on Thursday, but they saved it by the close on Friday. I still think this has one more little leg down in it. We look on the weekly time frame, so possibly putting in a small bear base there. I think there's one more good dip in nat gas, and then you'll get a really good buying opportunity on that in the near term. But I already have the levels worked out. If you want to get in on that, come join me on Patreon. The link is right here. But yeah, if you want to get in on that, we will be trading that again. We've traded that twice in 2021 and made some really good money on that via the Boyle ETF, which is 2 times long nat gas. All right, so let's move on here to the dollar index. Dollar fading just a little bit off of the highs here. Lost this kind of green bar here on the daily time frame. Looks like it's going to challenge that 50 MA. I would be surprised if it doesn't at least test that next week. But ultimately, on the weekly time frame, which is a little bit more dominant than the daily, there's really nothing wrong with this pattern. So you have this move up here. You kind of consolidated a little bit. Another move up. Little bit of a bullish inside bar, and then a pop, and now you're putting in another bullish pattern here. So I do think the dollar can get up to 98 to 99 over the next couple of months, and I do think that January is a good month for the dollar. I think it's just setting up for an advance right now. Let's talk about gold. So dollar pulled back. Gold had a nice rally. I was not expecting it to get up this high, but at this point it can get up to 1850, possibly 1860, but it's going to hit a lot of resistance right in here. Now, if it can break out and confirm above this pivot high here at 18, we'll just call it 1880, and we'll look at a weekly time frame. If you can close above this pivot, 1879 spot 5, by, well, any Friday close, we'll call it, then this goes right up to 2100 very quickly. If it doesn't do that, then again, it's still in a trading range, and obviously this trend line here on the lower side is your support area. If that were to break, then you would go down and challenge the lows here. So that's kind of the outlook on gold. Same thing on silver here. Again, silver just been range bound. You know, it had a nice little pop Friday, but still has to deal with this 2350 area. Hasn't been able to get above that. You can get through that. You can get to 24, maybe 2450, 2475 in the near term. And that's kind of your level there. If this can't get above that, well, now you're making lower highs again, and maybe you have to make you know, a move down to the lows again. But really, again, silver has just been in a range really for pretty much over a year now, since August of 2020, actually. So silver just been in a choppy range here. Not a whole lot to do with it on a swing trading basis either. Platinum, on the other hand, nice little pop here, and I like this bullish pattern here. So this does have a chance to advance through the 1020 handle, and you know, possibly to 1025 at this point. You know, but you have these moving averages above that. That's why it's consolidating. It's telling you it wants to try and challenge those. If it can get through that, then maybe you can get up to the 1025, 1040 handle. I do think platinum has a much better buy area on it, and that is a little bit lower. But we're not anywhere near that just yet. But for the near term, nice little bullish pattern there on platinum. Palladium, a little bit sloppier. Palladium is a very volatile metal, but pop up here off of the lows in mid-December, and now you're pulling back a little bit. So if this can hold 1860 area, and you know, then maybe it can make a higher high and come up and try to challenge that 22 handle there. If not, then you know, we'll just continue to monitor this. I don't really have any levels worked out on Palladium right now, but I do think platinum is the much cleaner setup if you're going to trade either of them. Let's talk about copper. So copper did get a nice pop here. Look at the weekly here. So this I still like this inside bar. It's holding. You got a nice pop. You need to get through 451. If you can get through 451, then I have it going up to 464 in the near term. The only problem I have with copper is on the monthly time frame. Because every time you get up pretty much north of $4, you try to consolidate, right? We get these big pops in copper, and then it tries to consolidate, and it ultimately fails. And until it doesn't fail, you know, we kind of got to give it that sort of negative bias. But in the near term, I do like the pattern on copper for a potential advance, maybe to 464, but it's got to get above this high at 451 first. So we had someone ask about aluminum last week. I'm going to pull that up for everyone, in addition to the copper analysis. But yeah, so aluminum coming way off the highs here. If you just zoom out, this probably has lower to go. Let me just fix this chart here. All right, so this probably has lower to go, but in the near term, if it can get above this red bar high here at 228.90, you know, then you can advance maybe to 236 in the near term. But ultimately, this is a sharp move down, and you have potentially bearish consolidation here. If it moves down in the near term, you're going to have support right at about 216.25, somewhere in that range. But ultimately, the chart on aluminum is much weaker than copper. You did kind of have a potential blow-off move here. Look how it just went vertical and then a sharp move down, and now you're kind of just retracing a little bit here. So aluminum in a much weaker position than copper overall. Let's move on to crypto here. So Bitcoin, we'll start with first. Again, we talked about financials and yields earlier, and I said that it's, you know, it's kind of a red flag that financials are not moving up with yields, and Bitcoin's kind of the same thing. So Bitcoin had this big dump earlier in December. It bottomed out, and it's kind of just been range bound here. If we look on the weekly time frame, it kind of looks like the IGV weekly that I showed you earlier, where you have this sharp move down, and now you're having bearish inside bar chop here. But the levels right now on Bitcoin to watch are this white trend line right here. If that breaks, you would trigger a head and shoulder pattern, much like the one that we had here. In fact, it's so similar, it's actually ridiculous. You have a move up, down, and then kind of a double head, like an MA pattern. And then you have a break, and then, you know, found support at the 30,000 handle, obviously. Well, this one, here's your shoulder, head, double head, M, and then possibly an A, and then here's your other shoulder. So it's actually strikingly similar how these patterns are almost exactly the same. on Bitcoin here. So if this were to break, it would take you down probably sub 20,000. That's the target on this. Now the bull case is you break this and you hold 40K right here, 40 to 42K, and you close back above the neckline, indicating a bear trap. And that would really propel Bitcoin much, much higher, in my opinion. But it is a bit of a red flag, as yields typically have a positive correlation with Bitcoin, and they have not been positive over the last month or so. Bitcoin really hasn't been able to get out of its own way. It's just been kind of range bound here, and you failed this bullish pattern here failed. You had a nice little pop, little inside bar that failed. So in the near term, I'm kind of having a little bit of a negative bias there on Bitcoin and crypto. Outside of that, I think that's about all I had to cover. We do have some, I think there's some areas of interest, possibly with tax loss selling. I know Jason's talked about the GDX. Look at, this is all tax loss selling right here. A lot of these gold stocks have been beaten down. There's forced selling going into the end of the year. And some of these, like, these high flyer tech plays, you guys know I've talked about Peloton, DocuSign, Zoom, Zillow, Teladoc. This is all tax loss selling right here. So these could be some definite January effect plays. Another area is possibly like the marijuana stocks. I do actually like these in this area. So they had a nice move really in late 2020, and then obviously that parabolic Wall Street bets move. They were part of the meme crowd for a little bit, and then just pretty much straight down since then. And you have to think that really since November, a lot of this is probably tax loss selling. So these some of these marijuana plays are getting a little intriguing to me. I also think that towards the end of the year, we have midterms, and this is definitely going to be a hot topic on the ballot. There's been Republicans talking about marijuana stocks and marijuana, or not stocks, but talking about legalizing. So if you have bipartisan sponsorship of some type of a bill, these stocks will move off of that. These stocks are very news driven, and in the near term, I think that there is a very good possibility that some of them could be a January effect play. In any case, overall, my outlook for early 2021 is weak tech. Look for these January effect plays. The beaten down growth stocks, some of the gold stocks can do well, and I think the marijuana plays are intriguing as well. In any case, I hope you guys have a great new year. Come check me out on Patreon. Give Jason a like and thumbs up, subscribe, etc. And I will talk to you all next week. Take care.